Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar has slipped, sunk and continued to fall, with the overnight session posting a fresh low of 69.18 this morning. Later today, the market gets the release of the Westpac Consumer Confidence Index for July, previously at negative 0.6, while China will release its June CPI and PPI inflationary numbers. The monthly CPI is seen as previous month at 2.7%, while the PPI forecast is at 0.3%, with the previous month's release at 0.6%. The bearish case for the Australian dollar is likely to continue if we witness a close under 69.10. As you can see here, it is a key level. It was the market move on May, around the 23rd. The break in June, and then the break later in June. Now a break underneath 69 would expose my objective, which is the yearly call of 68 cents. Resistance seen at 69.55 at the moment. But with the US dollar index posting further gains to the upside overnight, it now presses a level of 97.15. Now the dollar index is a measurement of dollar strength value relative to 6 major foreign currencies as a measurement by their exchange rates. So a break above 97.15 would in turn see the Aussie fall likely to be closer to 68.5 with the objective of 68 cents. But if you look at the euro, the ADX is trending very strongly here. Married up with the RSI does give the euro a potential challenge of 111.60.70. The reassess from there. Because beneath there, the target comes in around 110.70.80 to 110.25. Resistance seen at 112.55 in the intraday view. Dollar yen broke finally above the top side of the 108.60 level, but it's not showing any kind of momentum since the break. I do believe above 109.25 would give opportunity to sell this market, and if so, could see a cap around 109.75.85. That being a sell zone towards this region, I believe the market will look back towards the downside and still hold the view around 107.15.25, where I've outlined here. The pound on the weekly is very heavy. The pound on the daily remains the same. And as you can see from the technical implications, the trend is strong on the ADX, and the marriage between the RSI and also the MACD is still there as a marriage. My objective now that we've closed under the level of 124.70 is that we're looking at 124.20 and then down to 123.50.70 as the new objective. Reassess from there. The gold outlook still a little bit puzzling. The market has not bounced, and later today we do have the FOMC minutes, which the market will be keeping a very close watch on, and also we've got Fed Jerome Powell speaking at Congress. From the important message that he will give to the Congress, the market will be assessing whether we are still looking for a rate cut at the end of the month, around 30 to 31st, when the July meeting takes place for the FOMC. Nevertheless, if this is a double top, a break of this level here does expose the region of 1,335. So if you're trading from a short side, then you may want to add into the short position under 78. However, from the long side, you should lower your stop loss accordingly to your risk management in case we do get the break of 78 and plummets, because the market is factored in that the Fed will cut rates at the end of this month. If they don't, then the dollar may surge and gold may take a little bit of a suffering to the downside, so just be aware. Wrapping up with oil, well, we've broken up above the level of $58 and now looking up towards the region of $60 a barrel. The technicals, though, aren't that strong, but the bullish outside range day has been confirmed, and from the break above 58 does give further scope to 60, maybe even $62 a barrel. Reassess from there. Well, that wraps up for today. Thank you very much for joining me, and always look out for the intraday report. I hope you enjoy the great start to this new day.